How to build a credit score with a credit card. Hello, and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing and crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and are looking for smart money management options, then we are fortunate to have found each other. A good credit score can be a significant factor in your financial stability, because it enables your lenders to know how well you utilize your credit. And the best thing is, credit cards provide you with the best ways that you can follow and build your credit score by managing it smartly, regularly. The better your credit score is, the more you open new financial opportunities for yourself and can make things easier for you. Like, you can get new lines of credit, or you can get new loans without any hustle. And guess what? A good credit score also opens the doors to the lowest interest rates available when you borrow. You might be thinking about how we can build credit scores well. Don't despair, as in today's video, we will guide you about some simple things that will help you in building or increasing your credit score. Although these things require a little bit more effort in some cases, but they are worth it. So, without wasting time, let's get into a brief guide for building a good credit score. Before we talk about the ways first, let's understand why a good credit score matters. Well, if you have an excellent or higher credit score, you can save hundreds of dollars in your life or daily routine. Because it enables you to do many things, like you can get decent rates on mortgages, loans, and pretty much the things that include financing. With better ratings, you are considered a low-risk borrower, and more lenders offer discounts and perks. On the other hand, people who have a poor credit score are in the category of high-risk borrowers, and it results in fewer lenders, and that too getting away due to the higher APRs or annual percentage rates. In addition, a poor score will eventually not allow you to get better mortgages, car or house loans, and also life insurance. That's why you must build a good credit score so you can get all the perks that come with it. Now, let's discuss things that are not only helpful in building credit, but can also improve your low score if you are struggling with it. Number 1. Be an authorized user. This is the most straightforward way to build credit. You can ask to become an authorized user if your relative or a friend has a card with a decent history. It will add the account to your credit reports, and its credit limit will help you in total usage. This is also known as credit piggybacking. You get benefits from the status of an authorized user from his or her positive credit history. That doesn't mean that you can use the card of the account holder or also the account number to increase your credit, but you will have to discuss this with the account holder and ask for this favor. After that, you can agree on whether you can get access to their account or card or just be listed as an authorized user. Also, you should ensure that the account reports to all three main credit bureaus, Experian, TransUnion, and Equifax, to get the best results. Becoming an authorized user has an incredible impact on the credit score, especially if you are new or someone who has a thin credit file. However, the impact can be lesser for people who have established credit but are looking to lower their credit usage or offset the missteps. Remember that the primary account holder can control the complete balance. So, let's say you ask your parents to become an authorized user on their card and try to have a clear mutual understanding of how much credit you can utilize each month. Number 2. Go for high credit limits and less utilization. The first thing that you should go for is to get higher credit limits, because when you have a higher limit, your balance remains the same. Ultimately, it minimizes the overall credit usage and you can increase your credit score. So, if your income has increased, or you have added more years in your positive credit experience, then you can get a significant shot of getting a high credit limit. Well, the overall impact can be great, because usage is a big factor that can affect the credit score. This thing relies on the credit utilization ratio, and, in general, if you manage a low utilization rate, it can be good for your credit. The ideal ratio is 30% or less. For instance, if you get a limit of $10,000, then try not to owe more than $3,000. Moreover, it is a very crucial part of maintaining or building a good credit score. The utilization of a card is another significant factor that can affect your credit score. So, when your utilization rate becomes lower, then this balance is reported to the credit bureaus. That lower utilization will eventually be used in calculating your score. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload such informative and educational videos. Let's continue. Number 3. Pay your bills on time. Well, this is an important factor that you should consider if you're looking to increase your credit score. Because if you do not pay your bills on time or pay late, all other strategies that you are following to increase your credit score will become ineffective. It can be even worse, as the late payments usually stay on your credit report for about 7.5 years. In case you miss a due payment for more than 30 days, contact your creditors straight away. You can then pay your remaining balance as soon as possible and ask them to consider no longer reporting your missed payment to the credit bureaus. But if that doesn't happen, calling the creditor is still worth it, because with this, you can save your account from getting marked delinquent, as it affects your overall score. Paying bills on time can have an amazing impact on your record, as it is the biggest scoring factor in the VantageScore and FICO credit scoring systems. You can design a filing system to keep track of your bills every month. Furthermore, you can set up reminders on your account to avoid late payments, or can use the automatic payment system. Your payment history has the largest impact on your score, which is around 35%. Therefore, it is important to pay your bills timely. Also, if you pay all the dues responsibly, it even works in your favor. Number 4. Utilize credit monitoring. This is also crucial to take an overview of your overall credit score. You can use credit monitoring services to look at the changes in your score over time. And the good thing is most of these services are free and assist you in monitoring the changes in your credit report. It can help you monitor a new account that you opened or a paid-off account. Moreover, these services also offer you access to one of your credit scores from Experian, TransUnion, or Equifax, which are updated every month. Most of the credit monitoring services like Identity Force, ID Watchdog, or Privacy Guard also assist in preventing identity theft and fraud. For instance, if you receive an alert that a new credit card account opening has been reported to your credit card file, then you can report it to the credit card company about the suspected fraud. Number 5. Dispute errors in your credit report. The errors or mistakes in your credit report can be daunting for your score, so it is also recommended that if you want to build a score, then you should dispute the errors in your report. It will help you to increase your credit quickly. Keep in mind that you are entitled to free reports from all of the 3 credit bureaus. You can also go to the website annualcreditreport.com to add to your request. After that, you can check for what is a 10K financial report, like whether your payment is marked late even if you paid it on time, or if there is a mix-up between your and someone else's activity. When you identify any error or mistake, you can dispute them. The impact of disputing can be substantial for your credit score, because if your creditor reports something wrong, you can rectify it and increase the score. Well, it can take some time for the process of requesting, disputing, and resolving. However, it is worth it, specifically in cases where you are looking to apply for a loan and want to maintain and build your credit. Number 6. Use a secured credit card. A secured credit card is another great way to build your credit score. This type of credit card is secured with a fee you deposit into your account. And generally, the limit on your card is also based on the amount of that deposit. You can use this card as your normal credit card, and the timely payment on this card helps in building credit. Moreover, these secured cards also limit the risk of the lender and also refrain the consumer from extra spending. This card can be helpful for individuals who are new to credit or people who have a disrupted credit and want to add positive credit history. Also, you should go for a secured credit card that reports the activity of the card to all 3 big credit bureaus, because you can get enough history which will allow you to get a regular card after 6 months. In addition, you can go for some alternative credit cards that are without security deposits. Number 7. Try to consolidate your debts. This can be the smartest way to build your credit score. You can take the benefit of getting a debt consolidation loan from a lender or a bank and then pay off all of them if you have several outstanding debts. After that, you will just have a single payment left, and if you get the loan at a low interest rate, you will be able to pay your debts faster. It will improve your credit utilization ratio, and also your credit score will increase. There is another tactic that is pretty much the same as this method. In this, you can consolidate several credit card balances and can pay them with a balance transfer credit card. These cards also have a promotional period in which they offer 0% interest, but you should be aware of the balance transfer fee, which can be 3 to 5% of the amount you transfer. These are the best ways that can help you in building your credit score with your credit cards. We hope you found this video helpful. Don't forget to ask your questions in the comments section. Thank you guys for watching until the end. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time.